Hey everyone, welcome to the show. My name is Sam Shaw and I'm the founder of Wall Street Mastermind. This is Wall Street Mastermind's Elevate program, where we take our flagship coaching program and give it away for free to high potential students who are currently in a difficult financial situation. The goal of this show is to first and foremost give these students the coaching and guidance that they wouldn't be able to get otherwise and help them break into investment banking. Of course, we also want to give all of you an in-depth look at how to go about your own investment banking preparation process the right way, so that you can model it after the same proven methodology and strategies that we've used to place over 90% of our students into investment banking across every single bulge bracket and elite boutique bank over the last several years. With hundreds of thousands of applicants competing to break into investment banking globally each year, our team only has the bandwidth to help a very small percentage of you. So my hope is that this show helps all of you, even if you aren't able to directly participate in our program and work with us. So let's get to it. In this session, we answer some questions Ximena had about how to ace Hirevues interviews, which are becoming more common as the first initial screen that banks use during the interview process. She has also started studying for her technical interviews, so we answer some of her questions around the 3 financial statements. Hey guys, Sam Shaw here, founder of Wall Street Mastermind. We're back today with another session with Ximena, and we are going to, just start off by getting an update on the latest and greatest. So you were saying before we got on here, you just took 2 Hirevues for JP Morgan, right? It's kind of like what happened for the last 3 or 4 sessions is kind of all the behavioral questions and things like that. So how did that go? Like, give us an update.
So I think definitely the first one, I don't know. I was so nervous. I don't know how I know the second one I did really well on, I think, but the first one, I don't know. I was just freaking out. Everything went over my head. I tried to have my note sheets and everything went over my head. I did the 2 recordings. I used the 2 recordings, but I don't know. I definitely ended up a little bit disappointed on that. But that it's all, sorry.
First Hirevue ever?
Yeah, it was my first Hirevue ever. And I mean, they give you the resources. Even I don't know if you've posted it yet, but they have they sent you a link that's called like practice.hirevue. I don't know if you've posted, but I think that's something really great. I think it's public, and I think that it gives you like random Hirevue questions, and it helps you prep directly exactly how the interview is going to go. So I tried doing a couple of those, but of course you never know what the actual questions are going to be. And I think, like you had said, different places will ask you different questions. So I had reached out to some people on Wall Street Mastermind, but they were recruiting for a different year. And they had told me like, it's possible that they'll just ask you the same ones. So I prepped for those, but they weren't in the end, which is okay. But it's just definitely, I think even just besides, I think I'm getting a lot better at memorizing them, but I think it was really fresh, and it's just like the flexibility of like changing around the words of what the actual question is asking. So like when I got the question, like just like 3 different answers came to mind, and I was just like struggling throughout the question. So I think it's just like, as I go through more preps, I just wish it hadn't been that one, but that was my first Hirevue. So we'll see how that goes. I also don't know. You've also said like to name drop whenever it's good. I don't know if it's good to name drop on a Hirevue.
Like, are you asking me?
That? Yeah.
I think it's fine. I think it's just like any other interview, but it depends on how you do it, right?
Yeah.
Also depends on what's the context, like what is the question that they're asking, and how are you weaving in this banker that you talk to? You have to do it kind of organically and not make it feel super forced, right?
Yeah. Well,
you're smiling in a way that makes
because it was just the most embarrassing question. It was like, what have you done to look more like into this program? It was the AHL. So I talked about like, oh, I've like read more about this program in this website and I've reached out to so-and-so, and like I've like scheduled a meeting for next week with so-and-so, but I don't know. it just felt really awkward talking to the camera, naming people. So that like when I'm thinking back on it, it felt really cringy just because I've never done that before. So I don't know, it's just like, I think like if someone's like watching the video of, or like that person's like, yeah, oh, well, actually it's because the following week, the person I had scheduled the interview, she never showed up on the Zoom call. So I freaked out. I was like, maybe she saw my Hirevue and was like, this girl, and then canceled it.
Yeah. So I would just say, I think the way you brought that up is very organic. It's
Mhm,
like in the context of answering the question, that it was part of what you were doing to learn more about this program.
mhm.
So I think it's
Yeah,
completely fine. Any cringiness is just strictly in your head, like
your head, yeah,
you're kind of getting to yourself a little bit.
yeah,
And then in terms of the person not showing up, that happens. Like with these networking calls, you guys schedule ahead of time, and then bankers are really busy. Sometimes, like, not sometimes, a lot of times they get these last minute, they call it fire drills, which is like when your boss just drops some work on your desk and says, like, hey, we need this in the next hour, or we need this in the next 2 hours, or oh,
mhm,
like this last minute request just came in from a client. And like when that happens, they're always going to prioritize their work over speaking to some college student. Like they just are, right? And she probably should have like at least sent you an email saying like, hey, sorry, I can't make this time or whatever. But a lot of times they don't even have time to do that. So
yeah.
did you follow up with her afterwards?
I did. I followed up with her a few minutes later, like 10, 15 minutes later. I was like, hi, is this still a good time? But she never answered. So I just kind of left it at that.
Um, I think it's more likely that she just got busy or forgot
Yeah.
as opposed to she saw your hire view. I think like, like there's probably going to be only like one person or two people that watch your hire view at most. It's not like
Okay.
they send your hire view out to the entire firm and just ask everyone to watch it.
Yeah.
Also, I think like the way you said it, I think what you said was, at least based on what you just said, is I'm going to be talking to this person, not
Yes.
I already talked to this person, right?
Mm-hmm.
So that's the truth. It's not
Mm-hmm.
like you said, I talked to this person, had a great conversation, and you haven't talked to her yet. And then they went and asked her, like,
Yeah.
hey, this Ximena mentioned that she talked to you. And then she's like, I have no idea who you're talking about. It's not like that. Right.
Mm-hmm.
So I don't think you need to worry about it. It sounds like, though, honestly, like a lot of people get thrown off by Hirevues, especially like the first time they do it.
Yeah.
So it's normal, you know?
Yeah.
And what I will say is like, hey, at least this is for the sophomore program. It's not for the junior program.
Yeah. Yeah. That's what I'm telling myself.
Yeah. But you had a separate hire for a different program, sounds like you applied to
Um,
JP.
Yeah, so then this program directed you to something else that you could apply for, which is another, it's like an immersion program. So I'm hoping for that. That one I think went a lot better. I was just more prepared and I had like an extra week to practice my questions. So I was doing a lot of reps. And it's like an immersion program where they're supposed to invite you to New York for like 2 days in January, I believe, to be like in person. But that's also like, it seems like it's quite selective. So I'm shooting for that. And I talked with a banker this morning from JP Morgan who really, really wants to help. She was really, really sweet. So we're getting coffee again next week. And she was like, if you need help with anything, just let me know of any programs and I'll direct them. So that one I have 3 calls today and they've gone really well today. I have one at 7. But they're going, it's just like as you get the reps in, but I don't know. I'm getting too excited because they're like, I'm starting to like understand and like have more like organic
Yeah,
conversations where I'm
yeah.
not freaking out. So yeah.
That's great. It sounds like you're starting to get the hang of it, and you probably used the frameworks a couple of times now in terms of like how to have the conversation, and so
Yeah.
eventually it just becomes more second nature, and then it doesn't feel awkward anymore, right?
Yeah, for
Even
sure.
eventually hire views won't feel awkward to you once you've done it a few times. Because I'm looking at the list of questions that you just sent me, which, by the way, I dropped you the link to the database. If you could drop it in there, that'd be huge. Um, but I'm looking at these questions that they gave you. Doesn't really sound like there's any like curveball questions or like super unexpected questions. These are
Yeah.
mostly questions that we already covered
Mm-hmm.
questionnaire. So it's really just a matter. It's not that they caught you off guard, but you just like probably could have executed better. It sounds like.
Yeah, I think so. It's like it's an organization thing. You just have to be kind of organized and like have the events. I think I overthink it too much, which is what I used to do on the phone calls as well, where I was like elevator pitch this, and then I would go and then it'd be like, and then I would freeze. That's kind of what this hire review kind of felt like. I just had so many things I wanted to take information out from, and then I kind of froze a couple of times. So we'll
They
see how that goes.
they give you like a certain amount of prep time before you start recording, right?
Yes, and actually there's something that somebody asked because so what I've been doing a lot when I'm networking, I'm shooting for I guess quality over quantity. I'm definitely like shooting a lot of emails, but that's what I've been trying to do with like I go to a lot of different events for different banks and I ask a question and then I follow up on LinkedIn and then they usually connect and then it's so easy to like talk to them and be like, "Hey, you talked about this and this."
Right.
And it's worked super well with callbacks.
Yeah.
But where I was going with this was, sorry, where was I going with this?
That was fine. Um,
Um,
I think we were just saying, what was I saying?
oh, train.
Yeah, I just got thrown off too.
um, but okay, quantity over quality, I said that, but before, okay.
I'm trying to think. I don't know. But I mean, like the higher views. Oh, I asked you, like, do they give you prep time before?
Yes, okay. So this is like the thing where like you have like apparently you have a few seconds to prep before the question, but then you do the whole thing where it's 2 minutes long, and then you have like a pause time, and you can choose to watch your video or you can re-record, but that time that you pause is infinite. There is no time where you have to go on. You can literally like be there and do the higher view like 3, 4, 5 times, 6 times, 7 times, like on your camera, and then just click on like redo and then redo it. Which somebody brought up that's what I was saying as a concern during one of the events, and I'm sure like multiple people were like, do not say that. He was like, wait, so why do we have unlimited time to prep between the two things? It's like no, and they were like, we will look into it.
Why
Uh,
are you gonna be that guy?
no.
No, but what I was gonna say is like, look, if you get prep time either before your first try or in between your two tries, or either or, if you're just like, because it sounds like the issue is you had your answers, but like you kind of got flustered, right? You could even make flashcards
Yeah, that's
with
what I started doing.
your outline, with your Spark outlines, with whatever your outline is for each of your examples, and then
Mm-hmm.
when you get the question, just like during the prep time, just go to that flashcard and then you can organize your thoughts like, okay, here are my talking points, right?
Yeah.
You don't have to be like the entire answer written out because you probably don't have time to read that, but just to jot your memory a little bit. I think that would be helpful, you know.
Yeah, for sure. For sure.
And maybe even
Um,
like you can even tape the flashcard like right here on your
That's what
screen.
I did actually. In this last one, I did exactly that. I put a little slip and put it like right here, just for the three top points, and then elaborated on it.
We won't talk
Um,
about that.
yeah.
Okay. So anyway, it sounds like
Um,
first one thing goes well, second one went a lot better, but overall it was a good learning experience and just you're starting to get the hang of things, and I'm sure you have a lot more Hirevues in the future too. So
yeah, I
yeah,
hope so. I think like at this point, it's just feeling like I joined your program in like February. So I feel like it's also like it's given me a time to like construct this huge like momentum in it, which I think has just been like making me freak out and have like what like a lot of people say like imposter syndrome of like I don't know if I can, I don't know if I can, but like it just now it just feels so relieving to start actually going like through the motions and like the actual like higher views and the technicals and everything. Now it kind of feels more concrete rather than like an idea of like, oh, maybe someday I'll have an interview and talk to bankers. So yeah, I think that's just a lot better.
you don't need to have imposter syndrome. I think you absolutely can get an offer. And I've worked with so many students
Mhm.
now, so I feel like I have a pretty good gauge on like whether someone's on the right track or not, you know, and
Mhm.
whether you're making enough progress. And I think you are. So um, again, we talk about this all the time, like getting out of your own head and
Yeah.
not letting the mental trash or the self-limiting beliefs or whatever it may be get to you, right? Whether it's like during the actual interview or just in general, right? I think if you're anytime you're feeling that way, then um, you should message me. We can talk about it. A lot of
Mhm.
times, it's just like you just need some reassurances that everything's fine, and everything probably is, right?
Yeah.
We're here to give you that moral support too. So, sounds silly, but it's important. Like your mental headspace, like making sure that that's in a good place, like that's important, right? Um, cool. So I guess we'll wait to hear back from that, right?
Yeah.
And in the meantime,
Yeah.
you're now moving on to kind of your technical prep. Is that right?
Yeah, so now I'm trying to do more of the technical prep. I just kind of finished accounting, the accounting part of it. So what I was saying previously was that from watching like all your testimonials, like people talk about like your legendary testimonials and how people get through them in like 20 hours and so on and so, but like I started taking finance and accounting this year, like specifically after joining Wall Street Mastermind, when I was like, oh, I am interested in finance. And it's not the same. Like you just put all these concepts like into like this sheet that I was just saying that I like printed, which has like the thing, and it's just like in my head, it's so easy to walk through. And
Yeah.
it just really helps. So like I really do understand why some people, you can go from no background to like the way that you explain things, and as long as like you take notes. I don't know why schools, which is just a normal thing where like sometimes you just learn off the textbook so much easier than like with teachers. Sometimes people just like when they teach it, they give so many circles to a simple concept, and you're just kind of like, okay, CapEx, PP&E related link, that's it. Whereas
Yeah.
like in school, it's like, well, this and this and this, and then you just get so confused.
Yeah. It's first of all, I appreciate that. We always try to tell people, how good we think our technical training is, but I think it's just really hard to visualize what that really means until you actually go through it, right? Like I can tell you all I want, but until I actually show you, it's just like, well, how different can it be? But it could be different, right? So I think like an easier way to explain it, and it's probably the explanation here too, is just like I'm sure in college you've had some professors that are really good and you have some professors that are really bad, right? And the professors that are really good, they make everything like easy to understand, and it's just like you just get it, and you're just like having all these aha moments, like okay, right? And then there's like the bad professors who are super smart, and they know their stuff, but like knowing your stuff and being able to teach it is like two different things, right?
Mhm.
It's kind of like I don't know. I'm a big NBA fan. Like a lot of the NBA coaches didn't used to play in the NBA themselves. Right? It's like they're not the best basketball players, but they're really good at coaching. And so there's no secret sauce to it aside from just like I don't know, being able to break down concepts into like a simple to understand way, which is what we try to do. But so I'm glad that you feel like you're getting. So you finished accounting one, right?
Yeah, so I finished the accounting. What I personally did, I typed up your answers and I've like highlighted the important parts of it so that I don't miss. Maybe so when you go through it, you go through a lot. Sometimes like when you give an explanation of something, you give like 3 examples. I was wondering if that's what you recommend in an interview, to go through like 3 examples.
No, no,
Um,
no, I wouldn't. I wouldn't.
no.
Well, what do you mean? Like, what do you mean by like? Give me an example of one.
Okay. Um, when, for example, like for example, when it talked about when interest, I think it was right here. Um, oh, okay. So it was when like, okay, so it was on the example, can a company have positive EBITDA but still go bankrupt? So you gave like 3 different examples of like one, like if you're going into litigation and you're going bankrupt, and then like also the fact that um interest expense doesn't isn't accounted for. So it's just like different examples that you give to talk about how
Yeah.
EBITDA can still be positive. So it's like, is that more concrete if you give multiple examples or just one?
Yeah, you can get, okay, so in that context, yes, you can give multiple examples, if you have multiple examples, right?
Mhm.
Like each example is pretty quick, so like the overall answer is still not too long, and so that's
Yeah.
still right. Well, I mean, like at a minimum, you technically just have to give one example, right?
Mhm.
The question is like, how can, like, give me an example of when EBITDA can be positive and you still go bankrupt.
Mhm.
Technically, if I just give you one example, then that's the correct answer, right?
Yeah.
They can always ask you, like, do you have more examples, right? And then you add
Yeah.
up, but you don't have to. Now, if you want to offer like 2 or 3 right off the bat up front, as long as they're all correct, you're not going to get dinged for it, right?
Yeah. Okay.
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 So you gone through the 3 statement module. Did you go through the crash course too, the 2-hour crash course?
I actually watched that live, but I did rewatch it. I watched it when you first gave it live, but yeah, I rewatched it.
Okay, cool. So I guess like what questions do you have on the accounting side? Because obviously I know the module we covered everything.
Mhm.
The module is like what, like under 7 hours, I think. So
Yeah.
learn everything you need in accounting. It's just not bad, right? This is always say
Mhm.
like, take more than 20, 30 hours, but like anything you're unclear on, or like did you try the mock interviews at the end of the module and were you able to answer those questions, or
Yeah, I'm definitely like the basic ones of like, how are they linked together and like take me through them. I'm doing like the main general ones. I think for me, I just get but it's just the terms, which is also a problem in my accounting class, but it's just like learning the words and what they mean, which is fine. I think the only concept that I still like kind of don't get, even going through them, is just the adding back of DNA. Like I just, what I don't understand is when you have it on the cash flow, when you have it on the cash flow and you expense it the first time, like I just don't understand. It seems like, to me, it seems like you're double counting if you're like doing it over the period, but you already capitalized it
yeah,
once and that cash already went out and now you're depreciating it again and again, year after year.
yeah. This is where I wish my iPad was working, but since it's not, I will try to use my mouse pad. But I'm gonna write like a 6-year-old, so uh,
Okay.
so the question is basically like, why do we add back DNA on the cash flow statement, right?
Yeah.
Basically what you're asking. Okay. So if you really think about it, like if we start with the income statement, right, and then we have the cash flow statement, and then I mean, there's also obviously balance sheet, but we're not going to touch that in this case for this question. So what happened on an income statement is like you start with revenue,
Mhm.
right, and then you're subtracting out all of your expenses to get down to net income, right? And expenses could be a lot of things, right? It could be like, COGS, right? Which is
Mhm.
gross profit. Then you subtract out OpEx, right? And then you also subtract out like interest expense, and then you also subtract out taxes. So there's like all these things in the middle of the income statement where this is like what the company is spending money on, right? So then this is the money, revenue is the money that they're making. You subtract out all the things that they have to pay out, and then you get to like basically a profit number, which is net income, right? Then we start the cash flow statement with net income as the first line, right? So this number just gets carried over to the top. And then the reason why we're adding back DNA here, right? That's like one of the first things we do, right? Add back DNA. You gotta understand, like when we're subtracting out these expenses, um, the let's see here. How do I? The OpEx and the COGS, these two items can be either, actually, let me draw. So I'll just box this. These two items can be either cash expense, okay, or it can be non-cash.
Mhm.
You understand that concept, right? Which is like
Yep.
some of them are actual cash expenses where the company is like literally paying cash out of their bank account to whoever.
Mhm.
Right? Then there's the non-cash expenses, which are expenses like depreciation and amortization, which is included in the COGS and the OPEX line items. Right. So like, for example, I might say like, okay, COGS, let's say pretend like COGS is $100, total COGS, but like only 80 of that is cash.
Mhm.
And then there's like $20 of DNA.
Yeah.
Okay. So there's $20 of DNA here. And then let's say OPEX is like $200. Okay. And then like, again, you can break that out to be, let's say it's 150 cash. And then there's 50 of DNA. Okay. So then like the total DNA is what? 20 plus 50. So it's 70.
Mhm.
That means that there's $70 of non-cash expense baked into the COGS and OPEX numbers, which lowered your net income by, well, you have to tax effect to 70, but let's assume like, let's say tax rate is 20%, right? So if tax rate is 20%, that means that the non-cash expenses lowered my pre-tax income by 70, which means it lowered my taxes by 14.
Mhm.
Because 14 is 20% of 70, right? And to do the mental math, you just do 70, 10% of 70 is 7, and then 7
Mhm.
times 2 is 4, right? So if pre-tax income is lower by 14, but taxes is lower by, sorry, pre-tax income is lower by 70, taxes is lower by 14, that means that net income is lower by 56, right? Now, when we go to the cash flow statement though, so this is down by 56. When we go to the cash flow statement though, what is the cash flow statement? The cash flow statement is supposed to show how much cash actually went in or out of the business during the same period as the income statement, right? The income statement is showing you like how much profit did we generate during this past year. Like let's say this is the 2021 income statement. How much profit did we generate in 2021, right? But then when I look at the 2021 cash flow statement, what I'm looking for is like how much cash actually went in or out of the business.
Mhm.
Since the non-cash expense is non-cash, that means that the cash, even though we recorded $70 of expenses on the income statement, it's not like $70 of cash actually went out the door.
Okay.
Right? That's why we're adding it back. So we're taking this 50 and adding it back here, taking this 20 and adding it back here. So we're going to add back 70 here.
But I think so. I think then, like, I get that, but I think then I just don't understand. I mean, DNA is just it's a concept. It's not cash. Like, I feel like when you capitalize it and you expense it the first time that you buy the equipment, that is when you like expense it as a cash expense. But then DNA, how is that actual cash in your business?
I'll put it this way. The reason why net income is the first line on the cash flow statement is that if we had to choose one line item from the income statement out of all the line items on the income statement, if we are going to choose one to serve as the closest representation of cash flow or the closest proxy for how much cash came in or out of the business, it would be net income,
Mhm.
right?
Yeah.
Because revenue is the cash that's coming in, and then all the expenses are all the cash that's going out,
Mhm.
right? So then technically, if all of these expenses were cash expenses, then this would just be the actual cash flow,
Mhm.
right? But we're saying these expenses are not cash expenses, right? This 20 and this 50 are not cash expenses. So this net income number is not a pure cash number, right? So that's why
Right,
we use it,
right,
we use it as a starting point because it's the closest thing. We have to reverse cash transactions. We have to undo it basically.
right.
We remove the impact of these non-cash transactions to effectively get to, we can call it a cash net income.
Okay. Yeah, so to go back, like depreciation, I get that you depreciate an asset over time, but to go back, it's kind of the value of the asset if you were to sell it in the future. Yes, kind of like no.
Put it this way, it's like if you buy a piece of equipment, it's $100, right?
Yes.
And so actually, let's not use $100. Let's say you buy a piece of equipment and it's $360. Okay, like you buy a laptop for your employee because your employees need laptops to work, right?
Yeah.
$360, super cheap, crappy laptop, whatever. This laptop's useful life is 3 years.
Yep.
That means that even though you bought this in year one, it's not fair to burden the income statement that year with $360 of expenses. Because then you can say, okay, year one costs $360, year two costs zero, and year costs zero, right? Then it's going to make your income statement look skewed.
Oh, yeah. Okay. Yeah. Okay.
Because your net income is going to be artificially lower
Okay.
in year one, and then like year two and year three, it's going to look higher. Now, when you're looking at the income statement and you're trying to compare like what's happening from year to year, it's no longer like a fair comparison, right? It's like the trends are going to look weird. You're like, why are we so much more profitable in year two and year three?
Yes.
It's not because the business got better, right? So instead, depreciation just allows you to spread it out. So you're saying like, we're only going to allocate 1/3 of, this is really the cash flow impact, right? The cash flow is that $360 went out the door in year one, and then no cash went out the door in year two. But if you're looking at like a profit, like a P&L, which is also like what an income statement is short for, profit and loss, then you want to do it this way because it's more fair. You're spreading it across, right? So that's the concept of depreciation, is like, this is an accounting rule. This is an accounting construct where we're saying, hey, I know the cash already went out the door, but I'm going to spread out the expense over 3 years because we're going to benefit from using this laptop for all 3 years.
Yeah.
Right? The other way to think about it is like, if I only use the laptop for 1 year and then I decide to sell it, then I've used up about 1/3 of the value, right? So the asset value has depreciated by $120. And if I were to sell it at the end of year one, I should still be able to get $240 for it, right? Because this laptop could be used for 2 months.
Yeah. That was my question. Yeah.
And then if I sell at the end of year two, then this also goes away because I used it.
Yeah.
And now I can only sell it for 120, right?
Yeah.
It's like cars. You buy a new car, you drive it off the lot, it depreciates. Like if you now try to sell it as a used car, you're going to get less for it, right?
Yeah.
It depreciates. Does that make sense?
Yeah. Yes.
But when your car is depreciating, you're not actually like paying cash to people. It's just that the value of this asset has gone down over time because now it's older and it's more.
Yeah. So yeah, no, it all makes sense. So if the first, so like when you buy equipment, like I'm thinking on your example, so year zero, normally there's no change on the income statement. And then you have the cash flow statement and it goes under cash flow from investing activities because you capitalize the first time you buy it, right? So that doesn't affect the income statement. And so it's a negative, it's negative because you took it. So it's a negative cash flow. But then as the years pass and you're adding DNA, it's like you're adding back what you subtracted that first time now over the years.
Yeah, so okay, I see what you're saying.
That was like what I was like trying to understand. That's what you're doing, right?
You are adding back the impact, but if you think about it, it's like going back to that example, really like, if we draw the timeline, we should say year 0, which is like today. That's like
Mhm.
the time of purchase, right? Then there's end of year 1, end of year 2, end of year 3. Okay. And then so basically what happened is in year 0, you had a $360 cash outflow, right?
Mhm.
And then in year 1, you're adding back the 120.
Mhm. Yeah.
Year 2, you add back another 120. In year 3, you add back another 120. And then so it nets out to 0.
Yeah. That's it. That's exactly what I just wanted to, yeah,
Yeah.
understand. Yeah.
So
Okay.
you're like, this is why you're taking this cash flow,
Mhm.
which is all in year 0, which all happened in year 0, and you're just spreading it.
Yeah.
Like a third goes here, the third goes here, and a third goes here, and then now you're like, it's even,
Yeah.
right? Does that make sense?
Yeah. Yeah. That's, yeah.
Okay. So I mean, like, this is an important concept because the relationship between PP&E on the balance sheet and CapEx and cash flow statement and depreciation on income statement, um, that relationship is like one of the most important links, I would say,
Mhm.
amongst the 3 statements. So you got to make sure you're really clear on that, right?
Yeah.
And like if we visualize it, it's kind of like if this was a chart, like you could say, um, what's the best way to draw this actually? So I could draw like a waterfall, right? So I could say like, this is your starting PP&E, plant, property, and equipment, right? And then basically the way that the PP&E balance changes is like, anytime you spend money on CapEx, it adds to it, right? Or, oops. CapEx is basically just buying new PP&E, right?
Mhm.
So for example, like if my PP&E originally was 100 and I spent 50 on CapEx, that means that my new PP&E balance is 150, right?
Mhm.
And then now I'm at 150. So this is 150.
Yeah.
Right here is 100. And then now depreciation, let's say like I had to depreciate this asset by, I don't know, 20. Okay, so this is depreciation.
Mhm.
It's minus 20. So now we're at 130
Mhm.
is our ending PP&E, right?
Yeah.
So that's how you like kind of visualize like the relationship between these 3 things is like, CapEx means you're adding to the PP&E balance. Depreciation means you're subtracting from the PP&E balance. And then so this is like beginning, and then this is like ending. Ugh, so hard to draw on a mouse pad. Anyway, you got it. So this is 130.
Got it. Yeah.
Makes sense?
Yep.
Okay, cool. What else? What other questions do you have about cap?
Really on that, it's really that. I think it's very straightforward. The modules really give it straightforward. It was just really that. I just need to just get more and more for, I mean, the concepts I know, it's just a lot of them are so like, it's just weird concepts to me, like deferred and so, but it's just, I mean, I just have to go through them. I think for the next few modules, I'll probably have more questions with the new concepts, but I think for accounting, I'm pretty good.
Okay. Yeah, I mean, I think with these, now that you understand the underlying concepts,
Mhm.
the key is to just like do practice problems, right? But now when you're doing practice problems, you're not like just trying to memorize the answers anymore because you actually understand the concepts.
Yeah.
So, there's the mock interview questions at the end of the modules. And of course, like I'm sure you have a bunch of other like interview guides and whatnot where you can get
Mhm.
questions from. There's also now like websites online like IB Vine and Chancery, and they
Okay.
basically like it's like a flashcard app where they give you like these pop quizzes, and so you can like test yourself
Okay.
to see if you're able to answer the questions. And like if you run into a question that you just can't figure out or you don't
Mhm.
understand the answer even after you look at the answer, um, then you just come into Slack channels, the technical question channel, and ask questions, or come to office hours and ask those questions there. And that's how you learn, right?
Okay. What did you say the pages? It was IB Vine?
IB Vine is one. There's another one called Chancery, which actually was built by someone in Wall Street Mastermind.
Oh,
Not affiliated with Wall Street Mastermind, but
okay.
there's one of our students actually. So,
Yeah.
um, but yeah,
Okay.
so both of those are kind of flashcard apps, and then you have like all the interview guides and stuff, right? Like,
Yeah.
I don't like learning concepts off of the interview guides because they don't really do as good of a job as explaining, I think. But like, I think what those guys are really good for is just as a question bank, because they have
Okay.
so many questions in there, and you can just like test yourself, right?
Yeah, that makes sense. Okay. Um, yeah, I think that's for that. Yeah. I'll
So
just
I
keep.
guess like before we meet next time, you'll just keep going through the technical modules, and I guess next up is probably valuation, right?
Yeah, those are the next few. So I'll try to complete that I will. I'll complete it by next Monday. Yeah.
Yeah, I mean, if I look at the valuation module, I think it's is it a little bit longer? I'm trying to think. Um, Here, I have it right here. It's about, oh no, it's about 6 hours. So, you should hopefully be able to get through it. But if for some reason you need a bit more time or whatever, just let me know and then we can
Okay.
start checking back or whatever. But valuation is like probably the most important technical module because I think like in a technical interview, like the most number of questions you get are typically valuation questions.
Mm-hmm.
So definitely make sure you pay extra close attention to this one, especially uh, I mean, they're all important. Trading comps, precedent transactions, and BCFs. But
Mm-hmm.
I'll say BCF in particular is the one where there's a lot of different variables that they can ask you about, like how do you
Mm-hmm.
do this, how do you calculate that, how do they all kind of like interplay with each other, and so it's an important module to get right.
Okay. Okay. I'll go through that
Cool.
then. Great. Okay.
Okay.
Sounds good.
Alrighty. Well, if you have any more questions, then we'll wrap it up here, and then I'll talk to you next week.
Okay. Thank you, Sam.
All right. Thank you for tuning in. If you enjoyed the content, please subscribe to our channel or podcast so that you can get notified of all of our future episodes as well. If you'd like to apply to work with us so that we can help you in a similar way, feel free to reach out to our team at www.wallstreetmastermind.com/apply. The street is abbreviated to ST, so it's wallstmastermind.com/apply. Talk soon.